The conclusion in Chapter 19 seems quite clear on this point. The author argues that even if Trump's pro-crypto policies were enacted, they are unlikely to affect the dollar's dominance on the world stage.
Why not?
Because the fundamental reasons for the dollar's supremacy, the U.S. rule of law, the depth and liquidity of U.S. financial markets, the strength and independence of the Federal Reserve, ingrained trust built over decades, and powerful network effects, all those things would remain largely unaffected by these specific domestic policy shifts towards crypto.
It's not like the U.S. is trying to force the dollar on anyone or actively suppress rival currencies, is it?
That's a key part of the argument. The source points out that historically, the U.S. hasn't tried to suppress the international use of the yen or the euro. In fact, it sometimes encouraged it. The dollar's use globally is largely voluntary, driven by the stability, liquidity, and trust the system provides. Trump's occasional threats of tariffs against countries trading outside the dollar are seen in the book as exceptions that prove the rule, and likely bluster.
So, despite all the political noise, the emergence of digital assets, and the persistent calls for de-dollarization, the source concludes that the deep structural advantages underpinning the dollar's dominance remain pretty resilient.
That definitely seems to be the author's central argument, weighing all these challenges against the enduring strengths of the U.S. financial system and the powerful network effects built up over, well, centuries now.
Well, that was a really comprehensive look at the past, present, and potential future of the U.S. dollar, guided by Paul Blustein's work in King Dollar. Let's quickly recap the key takeaways from this deep dive for you.